Alright, Assalamualaikum warahmatullahi wabarakatuh. Okay, so I would like to just brief a bit on the Sukuk market. Okay, basically Sukuk is the tested in your final exam. Okay, so question one is introduction, question two is the money market, question three is Sukuk market. Right, so Sukuk is the third chapter that coming to your final exam. Right, so basically, Suku is interesting topic because Suku is okay. You guys know already. I think you guys answered to me already in the previous class. Suku is basically the Islamic bond. Okay, Suku is basically Islamic bond, right? So basically, sukuk market, okay, so what is sukuk market? All right, so basically, this is the objective that we are going to go through the Sharia framework for Islamic securities, definition and origin of sukuk, role of Sharia framework in sukuk structuring, which is the classification of sukuk, and sukuk structure, either it is sales-based sukuk, lease-based sukuk, partnership-based sukuk, or agency-based sukuk. All right, so here is the coverage, basically, Sharia framework for Islamic security, definition and origin of sukuk, role of Sharia framework in sukuk structuring, sukuk structure, sales-based sukuk, lease-based sukuk, equity-based sukuk, issue, opportunity, and challenge in the sukuk market, right? So we see first, what is the definition of sukuk? All right, so we see first, what is the definition of sukuk? All right, so sukuk is a certificate like bond, right? Bond is a certificate, right? So sukuk is also a certificate. Equal value representing undivided share in ownership of tangible asset. Okay, undivided share in ownership of tangible asset. Usufruct, usufruct is what? Usufruct is service, and service asset of particular project or special investment activity. All right. So what is sukuk? Again, sukuk is a certificate. So sukuk is certificate that represent the value of an asset. Okay. Again, what is sukuk? Sukuk is certificate. Certificate of what? Certificate that represent the value of an asset. What asset? Undivided asset, which is tangible asset, usufruct of service or asset in particular project or special investment activity or receipt. By this definition, you can see that this is a significant difference between sukuk and bond. Bond is, even though it is known as a bond, sukuk is a Islamic bond, but bond is basically a debt structure, right? A debt only, right? If the company need a fund, the company issue debt, so the buyer or the investor purchase the debt and give company the fund or the duit or the cash, so company can manage their what they want to do with the cash, basically. But in the case of sukuk, yes, it is similar. But in the case of sukuk, the ownership of the asset, you see, the value of the asset. You see, they sales not just for the sake of that, but for the sake of the value of the asset itself. Okay, so we proceed first. Okay, so the bond versus sukuk. Bond is Islam. Bond is conventional. Sukuk is the Islamic. All right. A bond is the debt investment where investor loan the money, the cash, the ringgit Malaysia to an entity, which is the corporate or government lah. All right, which borrow the fund for a defined period of time, a specific period of time, at a variable or fixed interest rate, depends on the type of bond. Okay, so owner of the bond are debt holder, creditor of the issuer. Issuer is the party or the company that issue bond, right? So again, the situation, if the company need extra fund to finance a project, for example, the company receive a project. What project? Like for example, to bangunkan kawasan perumahan lah. For example, a big housing area. Alright. So the company don't have enough money, don't have enough cash to start with the project. So what did the company do? One of the option that the company can do is the company can issue a bond. So the company can issue a bond. So investor can purchase a bond. By purchasing the bond, investor give cash to the company. So after the company have enough cash, they issue the enough number of bond. They have enough cash, so they can start their project. After they start the project, they receive a profit from their project. They will share with the bondholder, or they will share with uh, the debt holder lah, the one who purchase debt from them, which they call as interest, as their profit lah, as the debt holder or the bond holder profit, right? So again, owner of the bond are debt holder or creditor of the issuer. Issuer is the company who need fund. All right. Okay. So repayment of the bond, again, bond after certain period, right? So the repayment is the principal plus with interest, which is this interest is actually riba lah. Under Islamic, we call this interest as riba. All right. So unsecured bond, which is no collateral. Secured bond is security of asset of the issuer, right? So in this case, they mentioned to you there's unsecured bond. Unsecured bond, they just simply issue the bond. So the investor, if they trust enough the company, they just simply give the cash for the sake of this bond. After a certain period, they redeem back their bond together with the principal and interest. But if the company is not strong enough, the name is not good enough, the reputation of the company is not good, therefore the company need to make sure how did the company make sure the one who want to purchase their bond, the investor, really purchase their bond, trust them to purchase their bond? They put a collateral. They put what collateral? They secured the bond, security of asset. So they put asset. So in case if they unable to pay the principal plus interest, so the investor can get the asset. For example, okay. So next, in order to raise fund from the financial market, the firm either approach bank, option, right? Approach bank to obtain loan or tap into capital market or money market. So the former is known as indirect financing market because firm deal with intermediaries, whereas for example here is bank, whereas the latter is known as direct financing market because the firm deal directly with the investor. This is the situation. Okay. Again, like for example, the example that I give you, if the company receive a project to bangunkan kawasan perumahan, right, to have a housing area, right, okay, to develop a housing area, okay, they don't have enough cash, what they can do? They can borrow, right? They have a lot of option, right? They can issue share, they can borrow from bank. Like for example, they can borrow from bank. They can tap into capital market or money market if they want. Capital market or money market. Like for example, capital market they issue share, right? Money market, they sell their what? Their treasury bills or anything. Okay. So this one we call as the former is known as indirect financial market, right? Indirect financial market. Why indirect financial market? Because they go through intermediaries. They go through market, right? They go through intermediary. They go to bank, ask bank to find them a loan. For example, they go to bank or they go to security market. They purchase, they sell their share there. For example, that one is indirect financial market. Okay. So in the case of bond, the company issue the bond itself. Okay, in the case of bond, the company issue the bond itself. So the investor purchase the bond and give the company the cash. So this is what they call as direct. Okay, this is what they call as direct financing market because the company, the corporation, the one who need fund, deal directly with the investor or with the bondholder. Okay. Bond can bond be traded? Yes, bond can be traded into capital money market. Okay, bond can be traded into money market. But the company itself, we talk about the company who issued the bond itself, right? So the company who issued the bond itself, they didn't go to money market, right? They issued direct to the investor. Investor, like for example, they need 6 months to receive principal plus interest. Okay, but if they don't want to wait until 6 months, they need cash after 2 months, they can sell their bond to money market lah. Okay, don't get confused. Okay, that is basically a bond. All right. Okay. So what about suku? Okay, suku use different underlying contract. Okay, like for example, sales, lease, or partnership. Okay, different from bond. Bond, they issue bond because they need cash. Okay, so they hold that, they borrow from the investor. As evidence, they give investor a bond certificate, a certificate mention how much, for how long, for what interest they need to pay back. All right. To ensure the compliance with Sharia, and also enable investors to enjoy return on their investment. Okay. So, what do you think? This sukuk is it halal? Is it Sharia compliant? Okay, so we go back to see the history of sukuk lah. So during Umayyad period, soldiers were paid using grain and commodity coupon. Commodity is barang keperluan lah. Commodity coupon, alright. Commodity, commodity is the barang mentah. Okay, so upon maturity, they can present the coupon to collect the grain. Okay, because at that time they eat grain, right? They use grain as their main source of food, right? Like Malaysia, we use rice. They for them they use grain, right? So some soldier sold this sukuk prior to maturity to obtain cash. You see? Right. So the origin of this sukuk. Okay. So previously the soldier were paid using coupon. Coupon is certificate or is a piece of paper, right? A coupon, right? A piece of paper. So coupon, they can collect grain at the end of the month, for example. But if the soldier really want to use the cash, they sell this coupon to others with the price or the value lower compared to the one that they are going to receive, the value that the grain or the commodity that they're going to receive in future. All right. So again, this this show the creation of sukuk itself. Okay. So Ottoman Empire issue Essam or Sahim the share. Okay. Essam or Sahim, what is share to fund its budget deficit. Okay. The investor will receive the annuity. Okay, sorry, I cannot see. They receive the annuity or the return for the rest of their lifetime of Sahim is similar to sukuk. A certificate represent the underlying asset of venture. Okay. This one is second situation or second history. When Ottoman Empire, okay, they need a fund for the budget of their empire or the budget for their government to run the operation of the government. All right, so they don't have enough fund, so they want to ask a public to fund their operation. So what they did, they issue what? They issue share to fund their budget deficit. So issue share is issue a certificate, right? So issue a certificate, so the investor will receive the return for the investment or for the fund that they invest in Ottoman Empire. All right. So this is example of the sukuk itself. All right. So this too is the story of the origin or the creation of the sukuk. Before now is different lah. Now we use sukuk in what? Sometimes government also issue sukuk if they need extra fund and everything lah. But again, this is the origin or this is the situation where the sukuk is created, right? So basically, this is the Sharia of sukuk based on Sharia contract, right? So it can be a sales-based, lease-based, partnership-based, or agency-based. Okay. So in the case of sales-based BBA, remember buy vitamin Ajil. Okay, buy vitamin Ajil, the one that we discussed in the previous topic, buy vitamin Ajil. All right. Next is Murabaha. Murabaha is markup sales. Salam, a forward contract, and Istiqna. Istiqna is similar like Salam, but it is a manufacturing sales or manufacturing item. All right. List base, we can go for Ijara. Ijara muntahi bil al-tamlik, and Ijara masfufah bil al-dimah, which is a forward Ijara. Okay. Partnership can go for Mudarabah or Musharaka, while agency can go for Wakalah bi al-Istimar, where Islamic finance fund on behalf of their customer. Okay, so this is the classification of sukuk based on Sharia contract. This is from textbook lah. Just take it from textbook. Okay. Alright. So role of Sharia framework in the sukuk structuring. Role of Sharia framework in sukuk structuring. Alright. So one of Sharia principle may be used in different Islamic finance activity. Okay, one Sharia principle may be used in different Islamic finance activity, like for example, sukuk, Islamic bank, asset management, and money market. All right. Type of Sharia contract chosen by an issuer depends on the factor, right? Such as economic objective of the issuer, availability of the asset, company level of debt, credit rating of issuer, legal framework, and tax implication. All right. So sometimes, right? Sometimes I'm sure, right? I'm sure. You guys also wondering, right? Like for example, why the company want to issue sukuk? The company can go to bank, like for example, why company want to issue sukuk or why company want to issue bond. Isn't that the company have other easiest option, like for example, go to bank, borrow from bank, or issue extra share to get a fund, right? The objective is to obtain fund. So again, why the company choose this and that? Okay, again, that one is also depends on what the company want to achieve actually. All right. So you see here, type of Sharia contract chosen by issuer depends on the factor. A lot of factor influence the issuer to have this objective or to issue this or that item. All right, such as the economic objective of the issuer. Issuer want what actually? Issuer want what? Want to achieve what objective actually? Availability of the asset, company or level of debt. Sometimes the company level of debt is high already, so the company cannot go for that issue another debt. So that's why the company have other option like for example issue share for example, or the company level of share is increased already, so the company cannot go for extra issuance of share, so the company go for that debt for example credit rating issuer, legal framework, or tax implication. I think I told you already, right? In the case of tax implication, right? Why the company need to have a loan actually? Why the company need to have a loan? Because they want to calculate, they want to minimize their tax implication lah. Okay, alright. So classification of suku based on commercial function, like for example, a corporate issue are incorporated or company a non-government entity can have a murabahah corporate suku, ijarah corporate suku. This one is the classification of suku based on the commercial function. If the function is corporate, they can choose is murabahah or ijarah. Alright. If the classification is sovereign, issue are government or sovereign entity. Alright, if the issue are exchangeable and convertible, sukuk may be converted into share at maturity or at other condition lah. Can have ijarah, mudarabah or musyarakah. Okay. If it is a subordinate, alright, the repayment of sukuk is subordinated to the creditor or depositor. Alright, subordinated debt, also known as subordinated debenture, is an unsecured loan or bond that rank below others, more senior loan or security with respect to claim on asset or earnings. In the case of borrower default, creditor who owns subordinate debt will not be paid out until the senior bondholder are paid in full. Right. I think this one you know or you know already. Again, guys, sometimes the debts, right? The debt the priority is given. Of course, the priority when the case of when the case of bankruptcy, right? So the company need to cover first what they need to cover. They need to cover debt. But yeah, from the perspective of that, of course, share is the lowest. Ordinary share capital is the last they are going to cover, lah. Okay. They are going to cover a debt. So by that also they need to have a level of debt. Which debt is the most critical to be covered, and which debt is the lowest critical to be covered. All right. So uh, staple two instruments attached together and cannot be traded separately. Asset backed security of finance security are backed by income generated asset for the cash flow purpose. This involve a true sales of securitization. Resources to asset and not originator. Okay, and project financing. Okay, project of sukuk is used to finance a project. This is what classification of sukuk lah. Why the company want to issue sukuk and the reason, or they want to have sukuk or bond itself in this case, right? Um, this part, right? This part is important lah. This part is important. Okay. Uh, of course, in past year question, they have this question, and I will provide you the answer for you to read further. Okay. So what is asset bank and what is asset based sukuk? Alright. Asset backed sukuk. Okay. The underlying asset forming only source of paying profit and capital to investor. Okay, the underlying asset for Sukuk, Sukuk is backed by asset. What is called by backed by asset? All right, it is backed by asset when underlying asset forming the only source of paying profit and capital to the investor. Okay, only source of paying profit and capital to the investor of the Sukuk, right? Right. No access to other asset of issuer. It is depends solely on the underlying asset of project, all right? Not on the balance sheet item of issuer. So asset-backed Sukuk is similar to asset-backed securities. Okay, asset-backed securities or asset-backed Sukuk, which is similar to asset-backed securities. In other words, actually, for the Sukuk itself, Sukuk, right? Sukuk, you need to pay back the principal plus the profit sharing, right? So by the profit sharing, you have asset which is paying the profit to the capital. Okay, this is what they call as asset-backed Sukuk. Okay, asset-backed is the asset that generate profit. That profit is used to pay the investor. Okay, while asset-based Sukuk, right, the asset is present for the purpose of Sharia fulfillment rather than the source of paying profit. You see the word? Rather than the source of paying profit and the capital to investor. Same character as bond, where credit risk assessment are directly towards entity. If it is asset-based Sukuk, by right, the asset is not helping the company to pay the profit to the investor. Asset-based Sukuk, okay, it's just for the sort of fulfillment the Sharia contract only. You see, just to fulfill the Sharia contract. Because in Sharia, you need to have asset, right? So you put asset. But this asset is not going to help you to pay for the profit of this Sukuk. The asset, just the asset itself, to fulfill the Sharia compliance. Different from Sharia, asset-backed Sukuk. Asset-backed Sukuk, this asset help to pay profit to the Sukuk holder. So by this one, which one is good? Which one is better? Asset-backed Sukuk or asset-based Sukuk? Which one? Asset-backed Sukuk lah, of course, right? Because asset-backed Sukuk, the asset is helping the company to pay the profit to the Sukuk holder. While asset-based is just for fulfillment purpose only, right? So by right, if we following the really Islamic condition, asset-backed is the Islamic one. Asset-based is not the Islamic purpose. It's just for the fulfillment of the Sharia contract. Okay, all right. Okay, so okay guys, so I think I stop here and I will continue later during our other session lah. Okay, thank you.